I think this is one of those things that you're going to be genuinely surprised. No job, no problem. There are actually ways for you to be able to buy a home and not have a 9 to 5. We're going to show you multiple different ways in this video on how you could do that and how to prepare yourself and how to purchase a property without actually having a job. Yes, it's possible. So one of the first points I want you to consider is real estate is actually all about income. It's about income. It's about assets. So lenders care about your income and your assets versus your debt. Having a job helps, but it is not a necessary requirement. In other words, they're going to look at alternative sources to your income. Do you have investment returns? Do you have cash flowing properties? Do you have retirement benefits? Do you have Social Security? Yes, my mother, without a job on Social Security and retirement benefits, has purchased a home. Do you have other things like alimony or child support that you're getting on a regular basis? Next, we have stated income, or what are called no-doc loans. This is where you just simply say, I have this many assets, or this is my income, and they don't have to go through and verify each part of it. But there are some catches. Typically, this requires larger down payments, like 25 to 35% down. It requires substantial reserves and definitely higher credit scores above the 700s. This really works for people who are in a self-employed category, who don't have regular W-2 income, who can demonstrate or show income in other ways. Let's look at leveraging a cosigner. Let's assume Dear Aunt Tilly is someone in your life. And Dear Aunt Tilly is someone who has money, has income, has credit. They could be a friend, a family member, or not. It doesn't matter. But they are willing to take a bet on you. And what that means is they would co-sign for the mortgage. By them co-signing based on their income, their credit, their assets, you are able to qualify for the loan regardless of your specific status. Now, of course, this needs to be someone who has income and credit. Now, this one's super creative. This is called asset depletion loans. And what this means is they leverage your financial assets based on some hypothetical number, and they give you a loan against that then you can run the loan out over time. One of my favorite versions of this that we leverage all the time is lines of credit against your stock portfolio. So generally speaking, they'll give you like a 50 to a 60% line of credit against your stock portfolio. They're about a point above prime. So right now, mine is 5.33. I just borrowed against it so I could go pay for a piece of land in cash. This next one on the list is one of my personal favorites. What about seller financing? That's going and looking for a seller who is motivated to sell you a property with a low to a small down payment, and then they're going to be the bank. Generally speaking, with seller financing, your criteria to purchase is going to be significantly less. They don't do a lot of income verification, credit verification, things of that nature. Some do, some don't, but I'm saying generally speaking, they don't. It allows a buyer to be able to purchase a property with less hassle, less paperwork, and generally get a pretty good rate. On our last few owner financing deals, we've been able to get smoking rates on them that are about 1 to 2 points below today's rate. So for us, while rates have been high lately, this has been a alternative to actually create additional cash flow. Last but not least, there is a vehicle called the lease to own or the rent to own. Now, this is not an exact ownership, but it does create a vehicle to control the property. What I want you to make sure of is that you got an option agreement in place. An option agreement is the specific right to purchase a property at a predetermined price over a period of time. Let's just say the rent's $2,500. Maybe you could get $200 to $500 a month going towards the purchase price or your down payment, and that you agree to purchase it at $650,000 within the next 2 years. There's an example of how a lease to own or a rent to own could go. I'm Anton Stetner. I love talking about real estate investments, finance, and business, and helping our listeners make money in real estate. If you guys have questions about what we've just talked about, drop them below, hit that magic subscribe button, and share this with your friend who doesn't believe that you can buy a property without a job.